This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher today, and it does look like over the last several days, futures are overperforming the news. The only strength that I saw as far as the what we're seeing in the European news is that we did see Eurozone inflation coming in weaker than expected. So that's somewhat supportive of the stock index futures, and yet, as you can see, stock indices performing very well today. So with what we're seeing in how futures are reacting to the news, we would expect further gains, not to mention there is still plenty of accommodation left in the banking system. So look for additional strength in stock indices today and probably longer term. Over in the foreign currencies, seeing the dollar index trading higher. This idea is that the Fed's planned taper of their quantitative easing program will increase short-term interest rates. Also some optimism as far as the U.S. economy is concerned that there will be some additional recovery this year. So that's supportive to the dollar index, and I think this is a trend that will probably continue, I would say, through January. We'll see if that continues after that. So over the near term, look for continued strength in the dollar index. Euro currency under some pressure with those weaker than expected inflation numbers in the Eurozone. And in the interest rate markets, futures were higher, giving back some of the gains. Still thinking that treasuries are likely to drift lower in an environment of the Fed's tapering of their quantitative easing program. Of course, that would raise short-term interest rates. The same influence that helped the dollar index is a bearish influence on treasuries. So over the next month or so, look for a sideways to lower market in the treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.